Yo, what's up, crypto community? It's your man, Mr. Solution. So, on today's episode, I want to share with you guys my top three candlestick chart patterns for trading cryptocurrencies. As a matter of fact, these three candlestick chart patterns have been helping me tremendously. Okay, so I just decided to put it out here for anybody who is interested, who wants to, improve on his or her trading skills to probably try it out to see if it really works. And please remember that I'm not a financial advisor. So whatever it is I'm sharing here, take it take it with a pinch of salt. Do not swallow it hook, line, and sinker. Remember that I am nothing but just a human being, and as such, I'm prone to making mistakes. So please scrutinize every information you'll be hearing here. Whatever it is you'll be learning here, make sure you backtest it. Make sure it fits into your own trading pattern, into your own trading framework, so that you do not come to complain that you learned something from it that doesn't work. Please, this method, these things, I've tested them, okay? But then remember that market is an array of emotions. So what I see might not really be what you see. So that's why it's expedient that you go back and test run all these things, test run whatever it is I'm teaching here. Try it out on your own. Make sure it is working so that you can internalize it and not say that Mr. Solution taught you rubbish. All right, so let's go ahead. Okay, these are my the top three of them. Don't mind the names. I just decided to reframe them like this because that's just the only way I think I can be able to pass the information across so that it will consolidate on your minds and you will not forget it. Okay, so the first one I have here is fire on the mountain exit reversal pattern. It's funny, right? I think it is. And the second one is it stops and run breakout pattern. And then finally we have break and quench breakout pattern. These are very, very strange names, I know, but we can't help it. All right, so without further ado, let's just go to the chart and look at these things to see how they play out. All right, so for the first one we talked about, that's the fire on the mountain exit reversal pattern. Okay, so we have, okay, I'm logging into trading view now. Okay, this is actually trading view. Okay, what happens in this very candlestick chart pattern is that, okay, imagine a situation whereby you are in a room. Okay, you are in a room, yes, and then there are many people in that room. Let's say you are in a theater seeing a movie. Okay, then all of a sudden you hear a gunshot, like gunshots we are releasing the air, poo poo poo. What happens next is that everybody starts running around. Everybody starts looking for a way to get out of that place so that stray bullets or maybe the shooter doesn't shoot him or her. And then imagine a situation whereby there's just only one exit from that theater. There's just only one door for everybody to exit. What happens is that everybody will start scampering. So might jump the window, everybody will run around. Then, okay, imagine when everybody is now outside. Okay, everybody has now run out of the theater, and then it happens that it was just a false alarm. Like maybe it could be that somebody threw a banger, it could be a knockout, then everybody mistook it for a gunshot or something like that. Maybe not, there was really no cause for alarm, but then everybody was scared. Everybody was just scared. Everybody just wanted to get out of that place, to get out of that very building. Okay, so this is actually what happens in this kind of chart patterns. We see it when candlestick chart patterns, anyways. We see it when there is a rapid drop in the price of a coin for maybe could be for maybe in a day or three, maybe 2-3 days intervals. Okay, so this is actually a daily time frame. This trading view, I'm using the daily time frame. Okay, so maybe it could happen like maybe at a week, maybe a week straight like that. We are seeing a rapid drop. Okay, so this is actually what happens. Then when after this drop must have occurred, the next thing is that the price will start going up. Okay, so this is a typical example of what I meant. Okay, this is okay. Let me try and locate something like that here. Let me try and locate it. Okay, I think this is just an example. Okay, this is just an example of it. All right, we see this drop, we see this fall, okay, that occurred in this very trade. We see this fall that happens for a given time. Like from here, it started going down and kept on falling and kept on falling. So as it was happening, what was happening? People were busily selling. Okay, people were busily selling. Now it is when at this point, after people must have finished selling, probably at this point, the sellers were now exhausted, like they were tired of selling. The next thing that happens is that buyers will start coming in, okay, to start pushing the price up, even though yes, there still was a little drop here. But I just want you to get the concept that whenever you see this kind of drop, okay, you should be asking yourself the right place for you to enter. But then there is a caveat to this. The caveat to it is that you don't just blindly buy because you see that it has fallen. Okay. You don't just blindly buy because maybe you see that there's been a rapid drop in the price of that coin. You have to ask yourself what caused this. Okay. Don't just go and buy when maybe there was an FA about it, maybe fundamental news about it, probably that the owner of the coin exited scam or something like that. Okay, so that's why it's always good for you to be very, very certain, very through. Okay, be very, very sure of what cost. If it just normal drop that is normally witnessed in the market, it's okay, it's fine. You can just go right ahead and buy. Okay, so you have to be watching for is the point of reference. That's the area of value. And the area of value in this case is that you'll be looking at the nearest support. Okay, so the nearest support to it will be here. So you should be looking at buying at the nearest support. Okay, that's where your buy order should be. Even when you maybe it hasn't reached the normal support, you've seen that it has already started falling. You could just go right ahead and put a buy stop at the nearest support. Okay, and that was actually what played out after immediately it hits the support. What happened? Price reversed back, and if it hits here, remember that this is a daily chart. Okay, if you enter the trade at this, let's say $6,493, and then it rose to about $7,850. That's quite something to go home with. Of course, if imagine you were leverage trading, maybe 10x or thereabouts, and it rose to this very amount, it's something to talk about. Okay, so this is one of the trading and candlestick trading patterns I know and that has been working with me effectively. Remember what I call it? Okay, fire on the mountain, exit reversal pattern. There's actually a fire on the mountain. So everybody is running, everybody is just trying to get out of the market, to cut losses short. That is when you should be able to start looking for places to buy. I remember what the famous investor Warren Buffett said, buy when there is blood in the street, even when it's your own blood. But don't just blindly buy. Make sure that the blood you are buying is not the one that you will keep with you and it will congeal on your bag. Okay, so when you see spot this kind of rapidity in the crash in the price of the coin, when you see this rapid drop, that is when you should start looking for a place to buy. Right. So the next one there we have is the next one on our list is it stops and run breakout pattern. Okay, it stops. Okay. Now, this one happens when there is a given. Let's just say there's a given targets, okay, is giving high price. Okay, I think look at it here. Let me remove this so that it doesn't confuse us. Okay, let me remove this. Okay, there is a particular point, a particular high price. Neglect what happened here, please. Let's just focus on here. Let's just focus on this one. Neglect what happened here. Okay, so what happens is that there is a given area of value, like a given high price in the price of that coin. Okay, the highest point. Okay, that was that we have here $2,410.57. That's the highest point so far. So everybody is using this place as a point of reference, as area of value. So because maybe they've backdated and discovered that, okay, like when it got to this very price, the price closest to it, what happened? Market dropped. Okay, market fell. When it got to this very price, though not quite close, but something to talk about, the price actually dropped. So definitely remember that whenever you are talking about candlestick, whenever we are talking about price action, price action is nothing. Candlestick chart is nothing other than a historical demonstration of what has been happening in the market. Like it tries to tell us what has been happening. The market does nothing other than telling us a story. So once you're able to get the storyline of the market, there is no how you will lose money. Yes, you will lose money definitely, but then your losses will be minimal. Okay, so I always encourage traders, I always advise traders, get the storyline of the markets first. If you can get the storyline, then you flow along with it. And you can only get the storyline when you understand what the candlesticks are telling. And candlesticks do nothing in the chart other than telling us what the behavioral patterns and the behavioral tendencies of buyers and sellers. It tells us where buyers are willing to buy and tells us where sellers are willing to sell. Okay, so this is actually what happened here. From if we should backdate this, that was around 6th of August 2019. We saw what happened there. Then the price got to this very point. We saw this drop, all right? It got to this very point. We probably saw the drop, and then it got to this place too. there was a drop, and then so basically like if I was trading this, of course my bias would be that once it gets to this very level now, that it would drop. Yes, there is no gainsaying the fact. That is the truth. Okay, because when you take your mind back, take your chart back, backdate it and see what has been happening, then because market tells a story. Okay, so it means that at this point buyers, we are tired. Okay, here they we are tired, so definitely why wouldn't they be tired at this point? So what a normal person would do would be to short at this point. Then the intention of shorting at this point would be what? To buy lower. Okay, imagine after everything you shorted. Okay, yes, and then you were aiming to buy lower. Okay, there are two things they would do. Okay, one would be to buy lower, and then the next thing would be for them to set their um entry. Okay, they would set their buy stop around that same area of value. Okay, so we have our the highest point at this level now. Okay, so what they would, let me donate it very well. Okay, this is actually our area of value, right? Okay, then they would equally put the buy stop around this very region. Okay, they would put it here, and then many persons might maybe put their buys here. Okay, they would put their buys here. Then eventually, yes, price got to that place and started falling. Then maybe there are only two ways they can get into the market. Either they buy, either they sell immediately touch this very place, or they will not buy back. Probably they might be thinking or hoping or wishing that it drops lower, and then it gets to this very point, probably they refuse to sell. Okay, and then there is no how you can be in this market and not know that that is the right place for you to sell. Let's look at the support and resistance. The Okay, look at it here. You see, sorry, please, let me redraw it. Okay, okay, so once you're at this market now, it's obvious to you that this is a very good place for you to get out, because this is actually the support line. This is yeah, the support. Okay, the market has reached the support, even though at this point it was a resistance, but the resistance was actually flipped to a support at this point. So for the fact that it has gotten to this very place, it should be an indication that something is going to happen. Either it goes lower or it starts going up. And then look at what played out finally. What played out was that its price started going up. Then let's say they were hoping it would drop lower. Probably they were waiting to sell at this point. Okay, they were waiting to sell at this point. Okay, they were waiting to sell here, but then it didn't drop again. Rather, what happened was that it started going up. I remember that they have the buy stop at this very place, and then other people have their buys concurrently at this place. So immediately, price breaks out of this very place. Okay, then if you are trading it, like if you've seen that normally people that have their buy stop at this place, that at this point that's eating it up, and then you see this run. Okay, you see this big increment, then what the ideal thing for you to do now would be to buy again. Okay, so that you can enjoy this move, even though yes, at this very point there was already a little correction, but then overall the price has actually been going up. Okay, so that's the second my second method of trading the candlestick. So whenever I see this kind of thing occurring, okay, and then I see that probably didn't break down, it didn't go lower than that very area of value, rather it started going up, then I would keep my eyes on this the very place or the very point where the price got to, the highest point it got to before it crashed. And that's what happened here. Okay, I could just put a buy stop here, believing that if price should eventually eat it up, there would be a run. Okay, so I would put my buy stop here. And in a case where I didn't put it, and then I come and discover that it has actually gone higher than it, I wouldn't really mind entering the trade again. Okay, if I enter it, I'm not entering at a loss. Just for me to find the best point of entry. Okay, just enter the trade and you can see how it's been playing out so far. Okay, so that's my second pattern. And then the third and the final one is the one I call break and quench breakout pattern. It's a very funny name, break and quench. Okay, break and quench, kind of, it attracts you, it brings you in, but at the end it disappoints you, like Amaka does. All right, so don't mind me. Okay, so this is actually an example of that. And in this very pattern, I want you to know that three things occur. Actually, there are three steps to this break and quench pattern. And the first one is that there is actually a big trend. Okay, you see a rapid increase in the price of that commodity. You see a rapid increase in the price of that coin. Look at what happened there. Okay, look at what happened there. You see how the coin has been increasing from 13th of June 2019. We've seen this, okay, from 3rd of June. Okay, we've seen this rapid increment. See how it's been going up. Okay, then after that rapid increment, the next thing that happens is that there is a formation of a series of lower highs. Okay, price starts making a series of lower highs. Look at what I mean here. Look at it there. Okay, price starts making a series of lower highs. Let me color this. Let me make it red for to be very obvious. Okay, price starts making a series of what lower highs. You can see this. You can see this lower high. You can see this lower high. Okay. Now price starts making a series of lower high. Whenever I witness this series of lower high that the price is making, what it tells you is that market is becoming weak. Okay, there is weakness in the market. Okay, so this is the second part to it. Then the final and the third part that should break the Camel's hump is when you see that the major support breaks. And where is our major support here? Okay, let's look at this trade very well. We could decide to bring this lower to this level. Okay, these points. Okay, look at it. Let me take it up here. Okay, this, you see how price broke through the major supports at this point. Look at it. Okay, see the various supports we have. This is the support. Then finally, what happened? Price now broke through this the major support, which is the third step. Okay, so once you notice this thing, you can only do one thing. Either to find a way to, if you are still in the trade anyways, if you're still in the trade, there are only two things you can do. Either to find a way to, manage and get out of the trade, or you find a way to short the market. Okay, this is my third step. Okay, so if I was in this trade, I would just find a way. If I was still here, maybe I've seen that it has made it's actually made three levels of lower highs. This is the first high, then this is the lower high, another lower high. Once you see this kind of thing, you should be anticipating a break in the support zone, a break in the major support. And that was actually exactly what played out. You see how after making a series of these lower highs, it broke through this support, okay? And then what happened next? Price actually crashed. Like price started drop, even though it tried testing it, it tried testing the major support again, but the support that became a resistance, tried testing the ball, it couldn't hold, and then price still crashed, okay? So these are my major patterns. Once you spot this kind of thing, especially when the third one has occurred, you just know that the third lower high has occurred. Just know that there are two things you can do. Find a way to manage yourself and get out of the trade, or find a way to short the market. If you still have some money, you can just short the market immediately, because what is going to happen is that price is going to drop next. All right, guys, I hope this has been very educative enough. Remember the names I gave them. Please do not forget. Okay, do not forget. First one is fire on the mountain, exit reversal pattern. The second one is it stops and run breakout pattern. And then the final one is break and quench, exit breakout pattern. Okay. And in this third part, in this third one, I gave us the three steps involved. First of all, there is a rapid increase in price. Okay. There is a rapid increase in price. There is a big trend, which is what obtained here, which is what we obtained. Okay. And then the second point is that there is a formation of a series of lower highs. And then finally, we see the break in the major support. Okay, you see a break in the major support, which was what happened here. And then finally, price actually started dumping. All right, guys, it's been a pleasure doing this video, and I hope it's been educative enough. I hope you've learned. And if you have any question, if you have anything you want us to discuss, okay, I will drop my social media handles, my Twitter, my Instagram, my Telegram, even my WhatsApp contact. You have anything to discuss with me, you can come in, boss. We talk about it. And also have a Telegram channel where I share some of my trade setups, some of the actions I take in the market, right? So that everybody can leverage on what I know. Right? It's free now. The Signal group is actually free for now, but maybe subsequently we're gonna monetize it. But for now, I just want everybody to partake. All right, I just wanted everybody to enjoy this freebie while it lasts. Okay, guys, so please, if you've not subscribed to my channel, you are doing us a great disfavor. So please hit the subscription button, like, share, talk about it, share the videos to your groups, to everybody, so that we can all come together and learn. Till I come your way again, I remain your man, Mr. Solution.